Thanks for staying with us on Point. Inflation pressures are coming through in the manufacturing sector. Statistics South Africa released the Producer Price Index for April, showing an average price increase of 6.7% on a year-on-year basis. That compares to a print of 5.2% in March. Now, the key drivers of high inflation included food products, beverages and tobacco products, which rose by 6.7%, as well as coke, petroleum, chemical, rubber and plastic products, which were up by 11.9%. Metals, machinery, equipment and computing equipment were also up, increasing by 8% on an annual basis. Right, let's take a look at some market news now. China stocks firmed on Thursday, hovering near around 3-month high as subdued industrial data calmed worries over policy tightening, while some positive signs on Sino-US relations further boosted sentiment. China and the United States agreed that the development of bilateral trade is very important, China's Commerce Ministry said, adding that both sides exchanged views on issues of mutual concern. So analysts and traders said a series of recent soft economic data helped assuage policy tightening fears which had weighed on valuations of equities and risk appetite. Data showed earnings at China's industrial firms grew at a slower pace in April, with high commodity prices and weaker performance in the consumer goods sector limiting overall profitability from manufacturing. Foreign inflows continue to prop up the market, thanks in part to a buoyant yuan touching a 3-year high. The Hang Seng Index dropped 0.3% and the Shanghai Composite Index gained 0.2%. Let's go to Wall Street now, where U.S. stocks closed out Wednesday's session with modest gains, as recent comments from Federal Reserve officials helped tamp down concerns about runaway inflation and kept bond yields in check. The Dow Jones Industrial Average fell 0.01%, the S&P 500 gained 0.13%, and the Nasdaq Composite Index added 0.52%. European shares opened flat on Thursday, with losses in energy stocks offset by gains in the mining sector, while British bank HSBC's decision to exit U.S. retail banking was met with a lukewarm reception. Energy stocks fell about 0.3%, tracking declines in oil prices as concerns over Indian demand and increasing Iranian supplies weighed. Let's take a look at what's happening in the rest of the markets with commodities, currencies and more. All right, Patrice Rousseau, CIO at Ashburton Investments, joins me now. Patrice, a very good afternoon to you. Thanks so much for your time on SABC News this afternoon. U.S. markets ended higher yesterday. That's being attributed in part to Fed officials' comments helping ease concerns about inflation. Why are we hearing so much about inflation recently?
Thank you very much for this question, and good afternoon to you and your listeners. I guess the big feature of markets recently has been this whole fear of inflation, simply because you've seen this massive increase in commodity prices, which has pushed up inflation globally and a lot of supply chain constraints. The whole COVID episode has really interrupted supplies of many durable goods. A good example, the microchip which go into new cars, which has meant that cars have been in short supply, and that has pushed up the price of used cars, as a simple example. With the world having taken so much debt in order to boost growth, there is a concern that debt holders will be concerned as inflation increases, because as you know, returns on fixed income assets are fixed. Inflation is the enemy of those who own these debt instruments.
Okay. So U.S.-Asia relations also seemingly helping Asian markets. What's happening there?
Yeah, I mean, this has been a very interesting topic. The expectation was that the Biden administration would be a lot more dovish than they have proven to be. Also, there were expectations beyond that the EU would try to have a better relations with China. We've seen more recently with with the EU sanctions in March, that even these relationships are starting to deteriorate. But overall, there has been no major new news of trade wars or tariffs or anything of the sort that we've seen under the Trump era.
Mm-hmm. European markets opened quite flat today. Do we know why, and what's that market picture looking like now?
Yes, European markets, I would say, are waiting for the U.S. weekly jobless claims number. These have been breaking new lows, which are positive. There was a bit of disappointment in terms of one of the prints, German customer confidence yesterday, which was below expectations, improving but below expectations. So the big driver of markets remain what happens in the U.S., I would say.
All right, so even South Africa seemingly benefiting yesterday from that inflation news. Our markets closing in the green today. Let's take a look at some of the things that are happening. One, Mediclinic share price buoyed by that announcement that they voted to sell their shares in their UK business, Spire Healthcare. They sold it for much less, though, so why is there that celebration?
Yeah, I would say my own view is disappointing in terms of what they're getting in terms of price. They bought it for £6. £3.60. We're talking 6 years ago. They're selling it for £2.40.
Yeah.
But the market is looking at the potential. I mean, they're raking in about 5 billion rand. They're looking at the potential for debt reduction. I mean, Mediclinic, since the various acquisition in the Middle East, have been burdened by debt. I think reducing that debt will be seen as positive in terms of cash flow generation.
Okay, then also we're hearing that the Pepco Group, that's a Steinhoff subsidiary, listing on the Warsaw Stock Exchange. Did that have an effect on either of those share prices?
Yeah, the Pepco IPO went quite well. They popped on listing. Steinhoff's placing some of the shares they have, reducing its overall holding there. I think it's, again, a debt reduction story, very similar to what you were asking me earlier with Mediclinic. So I think everyone's trying to more, in the case of Steinhoff, understand what this type of profit generation the group will be able to deliver, but it's this continuous journey of reducing the debt burden within the group.
Mm-hmm. African Bank Group reporting a profit of 152 million rand for the 6 months ended 31 March 2021. That's obviously better than the same period last year. Is that a cause for celebration, or is there quite a low base because of the impact of COVID-19?
Yeah, as you say, rightly so, it's a low base. The debt burden is reduced from about 2 billion to under 1 billion. We've seen some improvement half on half in terms of the loan growth. They mentioned over 30% loan growth and deposit growth, which tends to be an indication of the health of the consumer, also increasing, almost doubling. So I think, like the other banks, there's been very conservative provisioning made last year into COVID. And this year, we're starting to see definitely signs of improvement or better outcomes that were expected in terms of the South African consumer. So good news, although I think, as they warned in their announcement, I think there is a bit of anxiety about the third wave.
All right. Speaking of good news, what happened with Mr. Price?
Yeah, Mr. Price, very decent results that we've seen. Again, we shouldn't be looking at the previous year, which where we saw earnings slightly under pressure. But if we look at the recent month, we've seen a 30% increase in sales. They're deciding to open new stores, 100 new stores. Cash sales remain strong, although the one concern is we're seeing inflation, clothing inflation increase to 5%. And as you would expect, even last year, what's interesting is the South African consumer spending on homewares. People, I guess, is the work from home trend, meaning that we've seen positive sales increases in homewares and telecoms, where people obviously want to communicate more digitally by mobile, and that's been driving the sales. But overall, very solid result for last year, and in the second half, a 21% increase in earnings, which really shows you the rebound post-COVID.
Patrice Rousseau, CIO at Ashburton Investments, thanks so much for your time on SABC News this afternoon and your insight into what's moving the markets today. After a